Good day, everybody. Still here. It's Tuesday, November 19th, 2013. Another edition here of the Daily Market Pulse update. Okay, so stocks drop again today, confirming pretty much sell signals, but really the volume is still down. So it appears more of a profit taking and a little bit of a pullback dip, if you will, but not really corrective, although we're still looking at very closely the number of distribution days. They didn't increase because, again, volume's been down the last 2 days despite the selling. So it tells me we're in for probably a bounce at some point. The VIX is still got room a little bit higher, so we may still see some downside. Question is, what are the distribution days going to look like by the time this happens, and what happens then? So it's a little dicey, but still reasonable for the time being. The Dow Jones, S&P, TSX are all still above their 8 exponential moving average, as well as the Nasdaq now just today. After resting on it yesterday, did slip through and close lower. Yesterday was a much greater selling day, but now with that decline today, it confirms the sell signal that was there yesterday. I'll show you that on the chart, but nonetheless, as I said, the volume low. So consequently, not as threatening as one might think. So let's take a look at charts then. Okay, so the Dow Jones on the chart here on the screen, you saw the upgrade, the uphill climb that it was actually in. It broke out above the 15,700 level, kept grinding higher, retested the 8 moving average, and then eventually into the 16,000, that beautiful round number, including the top of the channel that we have here as well. So that seemed like a logical place. Now look at the last two candles. Upper shadows are fairly large, spinning top formations essentially, so a little bit of a pause. Profit taking, as mentioned earlier. Volume is light, so that's a better sign. If volume was higher, that'd be even scarier in the sense that bigger selling is probably coming. That doesn't mean that selling won't come, because these are classic signs of minimum, as I said, selling. There's profit taking. That means people are selling. It's a question of how much, how big. And right now, based on the volume, it's not that big. But you're at a resistance. You're at a key psychological level of 16,000. So what do they do with this? The thought would be that there'd be a pullback, as mentioned, a little bit of a dip back toward 15.9, maybe 15.850. The 8 moving average. It could come down to 15.800 totally before another bounce, before the bulls would step back in again with another bounce. And then, of course, it would be the next time around, most likely. If it's not now, it'll be the next time around as to what they do really, because the distribution day count is pretty high, as mentioned earlier. So they may want to come back and retest this level again a little bit later. So let's look at the S&P. Let's look at that first, and then so the 1800 level was the key. It did that yesterday. Dark cloud cover, as mentioned. Of course, it did confirm that sell signal today with another red candle, but it's still sitting above the 8 moving average with a little bit of room to that red horizontal line, which is the breakout area that occurred last week at about 1775. So that's the area right here into that 1775 area, which may also coincide very closely with the 20-day moving average. You can see the stochastics below there is a little overbought. Doesn't always mean a whole lot. You can look back at other times and situations like here. Overbought the whole time, yet, went higher. So it didn't seem to bother it at the time, right? Of course, right here it did, and that's where things started to sell off, or at least go grind sideways. So anyway, we'll see what it does. We'll see what happens. 1800 was a psychological level. There may be some more room above that, but we'll see. We will see. So that's the S&P in short. The Nasdaq has been aggressively selling even more so. So there's the bearish engulfing, pretty large, pretty hard selling, but you can see it came right back toward the little blue trend line that I had based on the highs. Came into the 8 moving average, held, and then into the 20 now as well. The other thing to look at kind of closely perhaps is this large green candle. The midway point sometimes can act as a support area, so that might be part of the issue as well. Support there, support into the 20. Could always dip into the 50. Could, essentially the lows here as well, near 38.60. Those are all possible. But it's kind of like do or die in the next few days here, whether they take this thing down or they try to hold on. But that was a pretty reasonable selling yesterday. But again, low volume, oddly. So definitely profit taking at a minimum. Let's see what happens from here. And the TSX, let's take a look at that for the Canadian friends we have out there. And TSX has been kind of jammed right here near 13,500, right with the flat Bollinger Band is as well. So spinning top yesterday, that was a little dicey. I think we mentioned that as well. Now a shooting star today with that large upper shadow, a lower close as well at this particular juncture. So resistance perhaps here, a little bit of a kind of a cup scoop-like formation. So it's got room to dip back down toward. Let's put a line in here, right across here, based on those highs. So from there into the 50, and then the next level after that, of course, would be the lows in through here. So these are the levels to watch out for. You've got 13,400, 13,300 as well. So let's see what they can manage here, and if the bulls will step back in or not. Okay. U.S. dollar, Canadian dollar might be of interest. Look at a few things here. So that shaded area across there, horizontally across 104, has been support for quite some time. We've seen a couple of bullish candles. We saw a breakout, a retest, and then a breakout, a retest, and then a push off, I should say, with a bull sash a couple weeks back. A resistance area across the high of the bearish engulfing, forming another bearish engulfing bear sash combination over the course of 3 days at 105, dropping into this level here again, just above 104, and then bouncing today with what we considered a morning star formation, a 3-candle formation, with Friday, Monday, and of course now Tuesday's candle. That's a pretty good one because the closing price for today had to be beyond the midway point of the red candle on Friday, and it actually surpassed the open. It almost equaled the high as well. So it's a pretty reasonable, it's a pretty moderately strong bullish move there. So let's see what they do into 105 now. You'd expect this to come right back into 105. The upper Bollinger Band as well. The bands are going to have to open to make room, and then it's going to have a good thrust to get through. So you're still looking at 105.50 to 106 above there as the target we've talked about for quite some time. Everything appeared like it could do that. It's still struggling, going sideways for the last 3 weeks, but that's kind of still what you're looking for. Target into 105 first, and eventually then 105.50 to 106 for the U.S. Let's look at Treasuries. Treasuries have been kind of uneventful. Sold off a little bit more selling after hours here today. Right now, it came into an area right now where you have a 50-day moving average rising, you've got a 20-day moving average declining, you've got an 8 moving average just below. So all the moving averages are kind of in a confused state. You'd expect sideways, perhaps lower, just because of the recent downtrend. But right now, it's trying to recover after this little rally, a little bit of profit taking occurring, to see if they can bounce back. So where do they bounce back? Well, maybe a retracement from here, or all the way back down to retest the lows at 131 before there's a possibility of a bounce again. So any of those things are possible here with Treasuries. We'll have to keep an eye on it. Gold was barely up today. Barely. So it's holding the line. See the gold line? That's based on, it's not to the penny. It's more of a average area based on previous lows, based particularly on these 4 doji formations over here. It seems seemingly at least holding those levels reasonably well. We had a inverted hammer, morning star, then we have a retest of that area again. Harami yesterday, or today actually, Harami today, signifying essentially that selling may have stopped. That's really what a Harami does, right? And for those of you who are wondering about these little symbols I've got, these are all the abbreviations based on the Nissen Candle Scanner software package that acts as an indicator on this NinjaTrader charting platform. For those who are interested, check out that site. See here, that's about it. So it's still kind of looking for gold to bounce, but if it doesn't, if you're looking for a break below, we'll call it 1260. Certainly 1265, 1270, but 1260, below that for sure, you're looking to go much, much lower, but it's trying to hang on for the time being. Let's take a look at crude. All right, come on, load up. Crude, very similarly, looking like it's finding some support down here. I had a breakdown here with fibs and then essentially the possibility of where the retracement would be, and I said 618 to maybe max 50%. It hit the 618 collapse right back to support at 93 and has been bouncing back and forth between 93 and the 8 moving average. But you can see that some of the green candles and some of the bouncing going on, especially today. It was a really good open on the pit open at 6 a.m. Pacific time, 9 a.m. Eastern. After that, it was pretty choppy. But you can see now there's an attempt for a continuation going. There's a new high, there's a higher close currently developing right now into tomorrow's trading session. So looking for this to come back into 95 and then possibly a little higher, 96. It's got to get through 96 to have a shot to go back toward 99. And if it has any muster at all, back to 101. But 99 is the goal or the target if you can get into 95 and 96 first. We'll see if we can do that. What else do we want to look at? Maybe small caps because that becomes risk on sort of mentality and psychology. So hit that level right across there. You see the goal line. You have multiple spinning top doji. You have a very large bearish engulfing, a little bit of a fade into the 50-day moving average. Then a bounce back into that exact level again, bearish engulfing again yesterday at the 111.50 mark before fading again today. So it looks like it's satisfied to go sideways with a little bit of a dip still back into the 50-day moving average, lower Bollinger Band, maybe as low as the lows that were established at 107.50, but I'm thinking maybe a little bit higher. It might be closer to 108.60 if it's going to hold at all. Maybe 108.50. We'll see what they do. So it's got to break on momentum above 112 and then below 107 and a quarter really for a short into maybe 105. Transports would be another good one to look at. Now it's come back after the breakout across that horizontal line at 127.35. It's come back with a bearish engulfing yesterday with a very large continuation today and follow through. So it's come back to the 8 moving average. It's come back to the breakout line, the change of polarity, and it's coming back perhaps into the 20-day moving average as well tomorrow. So watch that level. It may happen as early as tomorrow or the next day where we see some kind of resolution. If there's going to be a bounce, it may happen at some point tomorrow or the next day. So keep an eye. If it doesn't, then of course, like I said, it's just probably falling apart and going lower. Retail, before we close this out, retail, same thing. Change of polarity a few days ago, come all the way back in, retest the 8, retest that $60 round number again. Again, now the stochastics is already below the overbought area, so this could come into the 20-day moving average. There's a window below there near 59. All those things are possible. Then, of course, you'd be looking for a fairly decent, aggressive bounce and rebound if they're going to do it at all. Semiconductors become important because that still ends up being kind of technology, NASDAQ related, etc. So you can see the resistance levels across here, 41.50 to 41 and a quarter. Plenty of work to do. Rising 50 still intact, so as long as that's there, you're expecting a kind of a dip and a bounce. But ultimately, it's got to get through a 41.50 to continue this bullish trend to the upside. If not, then at some point you're looking for a collapse below 40. That's about it there. And the VIX finally on this one, let's take a look at that. The VIX did bounce for a Morningstar formation yesterday. Continuation, of course, may have been expected because it was a moderate bounce yesterday with that Morningstar. That's a moderate signal based on how it formed, based on where it closed. Pretty decent. So at least some kind of a short covering, some kind of a short covering rally. Bounce into 14 to 14.50 is expected. There's a falling window across 14.50 to 14.75. The 50-day moving average, the 200-day moving average are in the same vicinity. Upper Bollinger Band very close as well. So there's a lot of potential resistance here. So that's an expected target. Hence, that's why I said the markets could drop still a little further based on the VIX maybe spiking, but it could spike and turn red, the large upper shadow or who knows what. But that's an area that I'd be looking for as a target. If it goes through, then that's another story. But of course, that's the target first. Where if you're in the VIX, you'd be thinking profit taking, getting at least exiting partial position at a minimum. Okay. All right, that covers the indexes.